All right, boys. So we're gonna do the closing of the take profit live. I executed this trade early on in London, in the early hours of London, inside of this fair value gap in here. That was one of my first entries. I pyramided inside of this one again, and currently we're running massively. So it'll be good to see what price does, honestly. As you can see, I'm trying to cover my balance, so you can see we're floating about 800 $800 on one account, and another account we're floating in about uh, £800, and another account about 100 and almost 200 bloody euros. So it would be nice to see what price does if it would just exponentially expand massively, because on the dollar we were bearish on the dollar. We were expecting the dollar to draw. Initially, I was expecting buys on the dollar, right? But yesterday's rejection, you can see we traded into this rejection block. Massive rejection. There's no reason to expect price is going to go high, because this is just telltale signs that they're going to want to drop the dollar, right? And a whole lot of other political stuff, right? But mainly the dollar was supposed to drop. So if the dollar is dropping, we're going to see euro, pound, New Zealand, Australian dollar, yen, every other equity, stocks, everything is going to be is going to rally as well. So in that, on that basis, that's what we're able to frame. The dollar, you can see the euro had the same signature as the dollar, traded down, took out all the, engaged the sell stops inside of this rejection block, right? And it had the massive rejection. And with that, anticipated, all I was trying to do was frame a internal range liquidity run to an external range liquidity run, and this was the retraction. We saw price retrace into this imbalance here. You could use this imbalance, but for me, we still dropped into this imbalance. So with that, I was able to pair it with a market maker model entry here, this fair value gap. That was one of my first entries, paired in with this inversion fair value gap. I like when two arrays are at the same time, they're converging at the same time. It gives me high probabilities. Below the midnight open as well. So I don't know if we're below the midnight open, but it doesn't really matter. Yeah, we're below the midnight open right here, and that was the first entry, second entry in here, and we are massively rallying to the upside. I'm about to head to the gym, but I expect we should, with no difficulty, reach the target over here. I'm seeing that we're gonna have to really with speed trade above these highs, because we wouldn't want the orders here to be pulled out of the marketplace. You know, if they see price during closer, they're gonna pull out the position. So you want to see a really fast run to engage the buy stops resting here, and ultimately trading to this imbalance. But I think I could close inside of here and really not expect price to drop into this place. So I'll close half my position here. I want to do that live on the stream, on this recording, sorry. If we can get above here, I would like to close half the position. We've dropped down to £700, so 12. If you look at the pound as well, this is some of the things. The pound, yeah, is moving, But I didn't like the pound because I'm usually trading like the euro and then the pound against the dollar, one of the two, right? One of those two instruments is going to be closely paired in flow with the dollar. So either going to have the euro very, very moving closely with the dollar, or the pound moving very, very closely with the dollar. So if I have the euro moving very closely with the dollar, I'm going to be trying to pair my positions on the bloody pair, right? If I have the pound moving closely correlated with the dollar, then I'm going to try to focus the execution on the pound, right? And this one, yeah, pound is moving alright, but we had a whole bunch of it was very reluctant to get out of this positions here, and as well as it was just not moving in the flow. And as you can see, we made a better decision executing on the euro, right? So yeah, just makes sense. That was that. But yeah, I don't focus on New Zealand, Australian dollar, because some of those pairs, they tend to move late at night, and I could be bearish on like the USD JPY. Then I come in London and I see that we had the start of the real part of the move that I would have liked to be in. It could have happened in the Asia session. You understand? And I don't like that scenario. Or even with the Australian dollar, the same thing with that, or the New Zealand dollar. And even to be honest, I just don't like the USD JPY. I don't like the yen pairs. It's something about the yen pair. I just don't like it. It's just it's stupid. I don't know. It's one of them stupid pairs, to be honest. I don't like it. I like the euro, the dollar, because I can get in the London session and the New York session, and the New York session as well. You know, like that's why I like them too. But yeah, the yen, Australian dollar, anything yen related, fuck them. You understand? Anything yen related, fuck them. Right? But this is really a really good trade. Really massive run. What news do we have today, man? Even so, we have jolts at 10 o'clock. That was good. I already knew this. That's why I looked to trade today. And yeah, if we get in here as well, I can look to. I don't think I'm gonna look for a reversal. Let me go on the dollar and see what happens on the dollar. Because usually after you get to the 10-minute point, it'll be some form of reversal that will come off it. You understand? But I can't frame a reversal really nicely. Price might still want to push lower, so I'm really not going to frame a reversal, because we could just as easily disrespect this imbalance and price might still want to go lower, right? So yeah, that's about that. And maybe that would give us a later trade at a later time on the pound or something. But yeah, ultimately it's here. I'm not gonna try, because some people will be in here and be like, oh, I'm looking for this low. Nah, low hanging fruit. What's the lowest hanging fruit in here? Is this imbalance, right, in the premium market, right? That's the lowest hanging fruit. The price, at least if it's gonna be bearish, it's gonna get to this point. It can get here if it's bearish, but what is gonna go through all this? Gonna go through all this balanced price range, blah 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 blah, and get here. Like, it's just a whole bunch of high resistance, right? It's not easy road. It's like when you're traveling and you have a lot of bumps on the road. It's not it's not a smooth delivery. Gonna go up down up down up down, and it just might not. Before you get to your destination, all those bumps would have probably wrecked the tires on the car. You understand? And you're not gonna be able to continue the journey, right? So those are the things you have to consider, and just not try to be the best trader in the world and demand the price gets to that level. It might not get to that level, but it can get to here, this imbalance, right? So those are the things you have to consider when you're dealing a price. I'm looking to see if we break above here, very highly likely we're gonna see it massively expand into here, because if you break above here, it should just straight up into that range there, right? And I can hit the gym. Yeah, but we watch price and see. Wallet, you understand? So Because I mean, everywhere we jump on. One way fun. My dad. Like the hourly, the 15-minute. If I look at it, I can start to. There's too many gaps in there. It makes me nervous. The hourly is much cleaner. Right? If I start to see a retracement on the next hourly candle into here, it'll probably look for a retracement for a continuation higher, and I would exit. I would just go to the gym. Then we're probably not going to be hitting the positions. We're not going to be hitting the targets this London. It's 10:22 here in Europe. We're probably not going to be hitting the target in London, and would have to wait till New York. And maybe with the JOLTS news, we could see an expire distribution with that. Yeah, but whatever. So the yen, the pound is doing. It's also clean, mate. It's clean. It's clean. It's clean. Okay, now I expect to see the rally up. We should just rally, take out these highs. It'll be beautiful. Let me close half above these highs, so you see. I'll close half in one position on one of the accounts. I'll close about half on this account here. I don't know. Let me cover the balance. You can see we're floating about £800 on that account. So I'm gonna close half of that. I'm 5 lots in, so I'll close like 2.5. Sell them. Done. Alright, so 460 booked. And as you can see, 460 euros booked already, pounds booked already. And on the next one, yeah, I'm not gonna, this one we're floating about 200. I'm not gonna do nothing on that. I'm just gonna wait for the full position on that because it's not really that much of a huge balance profit. So yeah, let's see what DOS made. At the rejection block, it's 50, 58 here. I'll close about 58 on that motherfucker. 59, 193. Let's see how price reacts at this level. We're trading at this rejection block, right? I want to see how price is trading at this rejection block. This is a rejection block. Look at the dollar and see what the dollar is doing. Dollar's pretty neat. Dollar's filling in this imbalance. Should see a dollar trade expand exponentially up into it. Yeah. I tend us to use this point here, this rejection. Oh, I'm using my hands like you can see what I'm doing. I would expect us to use this point, this rejection block, as support. So as price is traded through it, I expect us to use it as support on time frames and use that to see price to issue higher pricing. Like you see how it's respecting that level. I expect us to use it as support. If not, if we're a little bit disrespecting it, then I will close like half of that position as well, because there's certain points price must get through, right? I cannot demand it gets here. I expect it to get here, but I cannot demand it will get there. You understand? So you gotta manage it properly. It's almost London close. London lunch. It's almost 11 o'clock. 6 o'clock, sorry. New York time. 5 o'clock, sorry, New York time. Eastern time. The market usually will consolidate around these times, so maybe I might close. Let me look at this properly and see. Nah, I believe we're gonna go through that. This is the good thing. Sometimes you have to come on the high time frames and see how prices do, because on the lower time frames, it looks like it's held up around here. You got exactly as I'll add that. You see how it's using this point here as a support. It's using it as support. That's what I like to see. The rejection block right there. It's traded open above it, and it's now utilizing it. I expect us to see expansion. You know, I really do want us to hit this trade in London. I really would prefer that we hit this trade in London. 5,000. Let's see. I just rally up above these highs, these buy sides. Let's buy all this there. Let's see. Beautiful, beautiful. Nice. That's clean. That's clean. That's clean. Now, there's no reason why we shouldn't draw these highs. We should take out these highs. As we're bullish, that is buy side. There's a willing bias orders. There's willing bias resting here. There's no reason on earth why price shouldn't deliver that. There's no reason why price shouldn't deliver. If we should drop back out close, I wouldn't want us to drop down. We should take out this before we drop down here. I would prefer that, right? So we should most likely take out this buy side. We should take out this buy side before we drop down here. That's what I prefer to see. Yeah, there's some fucking woman in my house. Fucking disturbing my shit. Let me close here. 60 something positions. 863, regardless of whatever. Alright, so almost London. 30 minutes until London close, man. To be honest. Gotta see what it does, mate, to be honest. Dark green fun. My dark, and it really matter. pips is that from here to the target? It's about 10 good pips, 15.5 pips. There's a lot of fucking money you can make in 15 pips, boys. So people will get here around here, they'll be looking to close their positions, right? Man, it's a fucking lot of money. Like 15 pips, you can make 10 grand in 15 pips, man. Talking about shit. That's a lot of fucking range, man. I'm not looking to close anywhere around here. We have to at least get above these highs. And I just want to do in London. It'd be great. Trading, like the bias is the easiest part of trading, to be honest. The bias is so easy. You can put a child in front of the screen and he can look in the high time frame and see that price is going lower. 9 out of 10 times, as price is going lower from the high time frames, it's still likely to go lower. But the most important thing is timing that delivery. You understand, with your preferred risk appetite. You can go and you can buy the dollar at any point in time and say, okay, I've just bought the dollar, expect it to go higher. And from a macro perspective, yeah, the dollar is interest rates, everything is suggesting the dollar is going to move higher. Ultimately, on a long-term basis, yeah, the dollar move higher. But are you willing to hold the trade for months and months and end? You understand? You want to go in with a specific risk appetite. I want to make 2 times my risk. I want to make 3 times my risk. Now, if I'm buying here, what stop position can I put where should price get to my delivery and make 2 times what I've made? That is difficult. You understand? That timing aspect, that is the difficult part. And that's what a lot of people should spend more time working on, that. Because within a month, you can know where price wants to go to. Like within a month, if you put actual steady, you can know the bias. You can know, okay, from the weekly perspective, we are bearish. We are most likely to see lower pricing. You understand? But going on the hourly chart or the 15-minute chart or the 5-minute and buying in terms of that bias, you know, that's difficult, you understand? And that's what a lot of people fail to understand. But lately, Trump has been making the market move wild as well. Like, ever since like the last 2-3 weeks, we just had massive movements from like, I remember from like his inauguration. I don't remember when, let me go on the economic calendar specifically. I think on the 17th or something, we had, what was that? No, it wasn't on the 17th. I think this was when we had his inauguration. What the fuck is this crap? Sorry. No, it was on the 20th, right? This was when we had his inauguration. The market was crazy. It was shit. Then we had Trump speaks again. It moved crazy as well, especially on the indices markets. It moved crazy as well. And like last week and this week, the market has just had parabolic, not insanely parabolic, but it's just had some really big gap openings on Monday. Like, for example, we had this here. Let me go on the dollar. It's easier to see on the dollar. We had this massive here. We had this one here. You can see how it's just as Trump is coming to positions. Before, we don't have gaps like that. The market isn't constant, you know, balancing itself out. But all of a sudden, it's just been moving crazy. Like, I don't know if this is going to be the mantra for, you know, Trump's tenure in office. But yeah, I mean, I like it. It brings a lot of volume. With volume, we get manipulation. And with manipulation, we get, you know, we can time ourselves inside of that perfectly. So yeah, bring it on. Me, I don't fear that. Actually need it. I'll prefer that, to be honest. Trump continues. He should just keep hammering at it. And a lot of people are blowing accounts. I know yesterday stirred up accounts. You know, if you go and you look at, let me even go and look at it here. If you go and you look at the futures on the NASDAQ market, you can see the massive gap openings that just happened recently. Like, look at this. We had this opening here, like on Sunday. Like, it's just been crazy, to be honest. Quite honestly. Last 2 weeks. And I know this stirred up accounts yesterday. I know for a fact this stirred up accounts, and this day, you know, people tried chasing the move and all of a sudden retraction. This is a balancing act. This is what the market does. You understand? It ain't as easy as, oh, it's going higher, let me just buy as well. You understand? It's not that easy. It's very difficult. Okay, it looks like we might get the the run of this highs in London. I'll close on one account over here above these highs, and the other account I'll leave it for this. You understand? This is the reason. I want to see price get here. It just might not get in here. It could trade in here and it could reverse, right? And there's always two characters in for trader, right? You have the trader in itself and you have the gambler. The gambler in me wants to hold for this target just so I could be right. You understand that? That's that gambler and me. The trader is like, hey, you know what? Manage the position, take some off here, blah blah. You know, and yeah, that's what it is, mate. To be honest. 5,137. 137. 137, you can get above. So I've closed in on one of the accounts. I'm leaving it for that because I want to head to the gym now, and it looks like price might just want to come and hold off in sort of London consolidation. And on this account, we've ended the day with 226 bloody fucking dollars. And this one, we're gonna leave the position to run. Obviously, we've closed in half, so yeah, we're gonna see what price does. All right. Until I talk to you boys again, good luck and good trading.